In this video, we're going to talk about the Ichimoku trading indicator. Stay tuned. Hey traders, a very warm welcome to you. So Ichimoku is an indicator that comes from Japan, and I'm going to confess here, I looked at this indicator probably 8-9 years ago, looked at it, glanced at it, it didn't really suit my style, my strategy. I discarded it. So I'm really revisiting it now because it's come up on my radar. I thought, you know what, let's look into it, let's investigate, see what it's all about, and if it's something that can integrate into my trading, great. If it's not, no problem, move on to the next thing. If it's something that complements my strategy already, then I'll use it. If it doesn't and I find it adds more complex nature to it, then I'm not interested. So on that note, guys, if you use this, leave a comment below. Let me know your thoughts. Have I interpreted it correctly? Is there another way of trading it with it? You know, is there little tips or tricks for it? Let me know. But anyway, I'm going to guide you through kind of my research, my thoughts on it, how I think it's useful, and how really it's meant to be used. So it looks like a mess, right? When you first look at it, you think, hey, if you're not used to having indicators on your charts, or you're used to having one or two, you look at it and you think, boy, this thing is messy, especially when you start looking at stuff that is in a range. Like, that is just pure kind of horror for my eyes for someone who likes pure price action clean stuff and maybe the odd one or two indicator or tool. However, that's the point of it. The point is that you use it to glance at something and immediately say, hey, that's in a trending environment, that's going to offer me opportunities. It's best used in trending, it's best used, should I say, in trending environments. So the idea is that if it looks horrible to your eyes, then you discard it, and it's not the kind of trade that you want to take. However, when you look at it and you say, hey, actually, that looks okay, that looks a little bit cleaner, and what we're going to do is we're going to look at a couple of charts, we're going to look at Euro US dollar, we're going to go back and look at Dow as well. So we'll get a couple of ideas of how it works. That's when you go, okay, is there an opportunity there? Right, so let's run through how the lines are calculated. Now this gets a little bit complicated, and the reason I want to run through this is because from a personal perspective, I like to just briefly see how things are calculated, because that gives me an idea in my mind of how I might use them. I'm not really one for saying, you know, when someone says, oh, you've got to buy it when it does this or do that, I'm like, okay, well, but how is the indicator calculated? Because that's going to give me an idea of what it's trying to show. Okay, understanding, is this a trending tool? Is it for buying pullbacks? Is it strength? Is it showing weakness? Is it showing exhaustion? You know, what is it actually displaying? So let's run through briefly how it's calculated. If you want to find out more, then, you know, go and check out stuff on Google and you can look at all the deep formulas. But I'm going to run through briefly how it's calculated. So we have in front of us 1, 2, 3, 4, 5 lines. Now this, what I'm going to do here is I'm going to sort of suppress some of these so we can look at them individually. But first of all, this is called the cloud. This here, this line here is called the conversion line, and this is called the baseline. I'm going to double check that I've got that correct, because I'm pretty sure. The blue one is called the conversion line, and the red one is called the base line. But really, let's isolate these two first and talk about those while I've got them up there. Let's get rid of the lagging span, the lead in this, and we'll talk about this. Okay, these two are literally moving averages, guys. On a daily chart, so I've got Euro US dollar daily up here. It's a 9-period moving average and a 26-period moving average. So it's about a 2-week and about a month worth of moving average. Pretty simple stuff. However, a little twist on that is that it's calculated on the midpoint. So not the close as we normally do with our moving averages. It's calculated on the midpoint rather than the close. So 9-period, 26-period. It's pretty simple, makes a lot of sense. And, you know, just put this in your mind now, is that we're using a kind of crossover strategy with other stuff as well. We'll get to that in a second. I didn't quite suppress that plot background, did I? Never mind. This is now what we're going to look at. So those two moving averages, great. Now this, what we call cloud. Let me get rid of some of these arrows here. This is what they call the cloud, the Ichimoku cloud. And this is kind of the foundation of the strategy, if you like. And this is really all derived from those two moving averages before, and they've got special names. I say they've got a baseline and conversion line, and I think they're kind of called Tenkan Sen and Kinju Sen, or something like some Japanese names for them. Like I say, I don't want to get bogged down in the details of it, but I just want to kind of grasp in my mind, and I'm sure you do too, as to how how this thing works. So this cloud is formed basically from those two lines, from the baseline and the conversion line, and the leading edge, if you like, the lead one or lead A, is calculated really, it's the midpoint between those two, that conversion line and that baseline. It's the midpoint between those two moving averages, and then it's just pushed forward by 26 periods. Okay, so 26 days forward, that's why it's kind of ahead of the price. And similarly with this lead 2 or lead B, however you want to call it, that is just a 52 period midpoint. So the high minus the low divided by 2, again pushed forward by 26 periods. So you can kind of see that it forms this cloud. Now the basis of the Ichimoku strategy is that as price is above the cloud, you're only looking for buy signals. As price is below the cloud, you're only looking for sell signals. And if I drag price over here, you can see how the cloud changes color, obviously depending on how you've got it configured in your charting package, but it changes color. So broadly speaking, that's exactly what we're doing, and I'm sure there are other ways of doing it. Again, comments below, guys, always welcome. I love to learn more about this stuff like you do, but the point is it's a filter. Price above the cloud, we're long only. Price below the cloud, we're short only. Okay, now we start to add these conversion lines and baselines in, and we use these as a trigger. So the theory being, if we're above the cloud, we're long only, and we're waiting for the trigger when our fast period moving average, which is the conversion line, crosses over the baseline, just like a normal moving average crossover strategy. And in this example, in this chart here, we would be long around here. Okay, this point here. So we've got price crossing over, sorry, we've got the price above the cloud, and we've got the moving average crossover, and we stay with it until, I don't know, maybe we want to come back into the cloud or something like that. And we're not going to talk about kind of targets and stuff, but the theory is that's what you're looking for. You're looking for crossovers. I'm not sure if we quite got one there as along, but you're looking for crossovers to the upside as you're trending. So it's a real trending type tool. And same for the downside. If you're below the cloud, you're looking for crosses to the downside while price is below the cloud. And if we look at the US 30, which is obviously the Dow, is my mouse, there it is. Let's clear out some of this stuff here and let's look at it from a perspective. Let me go back to the pen. There we go. So you would be long when price is above the cloud again, and when we get the crossover. So you're not going to be going short when you get a crossover here because price is above the cloud. But you're going long as it comes back up, price comes back up, we get that cross and we're above the cloud. There's your long, and you'd probably still be in the trade now if you're using it strictly as it says. It's an interesting tool. One thing to add, guys, is this final line, which is the lagging span. And this is kind of price, but it's pushed back by 26 periods. Obviously you can adjust it to suit, and again you can add more complexity or not as you prefer, but this is price is pushed back. And now really the way that I see that people use this is that they kind of say, okay, it's a confirmation. So in other words, if we really have this lagging line kind of way above price, way behind price, like we have in this chart here, it's showing you that the trend is strong, it's good, it's solid, everything's kind of on your side. When it starts to catch up with price, it's just a little bit of a warning. It's kind of saying, okay, it might not be as strong as you'd hoped, but it's still strong. And actually, when you look at the Dow chart here, you see when it caught up with price here, we went into kind of a month worth of stagnation before we roared on with the uptrend again. So anyways, that's a kind of brief overview of the Ichimoku. I may have left something out on that. I'm sure there are loads of other ways of using it. It's an interesting tool, or an interesting indicator. Personally, I like the fact that it kind of identifies the trends, very visually, very easily. I think we could simplify it more by perhaps stripping some stuff out or adding some filters and stuff. But in theory, it's a nice way of getting involved with those big trending moves. And as you can see on some of those examples, if you get it right, it's the sort of thing that I guess if you're on it looking for a swing trading strategy, it's a great thing to kind of filter out the noise, get on board to potentially really big moves. All right, guys. Good trading. As always, comments below, thumbs up, subscribe, all that kind of stuff, and more videos from me, other traders on this channel. Good trading. Take care. See you in the next one. Bye-bye.